Hi there, welcome back to Dukascopy TV. I'm Ben Jones. It's Wednesday and time for your second instalment of forecast for this week. On the line, I have Carl Hammer from SEB to discuss the Euro-Swedish krona pair. So to begin with, Carl, you predict this pair trading at 9.35, continuing the uptrend we're seeing at the moment. Why is this?
Well, it's a very small additional krona weakness that we predict, and primarily I would say it's more driven by continued upside in other crosses in versus the dollar, but also the pound, which would likely keep the trade-weighted krona at current or slightly weaker levels during summer. We also have a normal seasonal pattern, which is negative for Swedish krona over summer as Swedish exporters go on holiday. So it's really it's a fine-tuning forecast where roughly spot is expected to stay unchanged in the coming month or so.
Now you see a further increase 3 months from now to 9.40. What brings you to this conclusion?
Well, it's again a relatively small move upwards, given the move we've already seen after the very dovish rate decision made by the Riksbank last week. The most important factor here is that I think that if you wish for seeing additional krona weakness, we think the Riksbank will be less of a driver in this perspective. In particular, the speculative market has been very focused on shorting Swedish krona, on the dovish potential for monetary policy in Sweden, which has absolutely been the right view. Now I think monetary policy has more or less delivered on its task to lower rates in order to boost inflation and inflation expectations going forward, but also actually to weaken the krona slightly. And now, given that the interest rate market is more or less pricing this outcome in the next 6 to 12 months of very dovish monetary policy in Sweden, the driver we have now for additional stocky weakness is more related to the upcoming Parliament election.
And finally, 12 months on from now, what makes you think this pair will drop to 8.90?
Well, in 12 months' time, we're expecting Eurostock then to move slightly below 9, and it's primarily based on the fact that at the time we expect continued very dovish monetary policy run by the European Central Bank. Growth and inflation will continue to be weak in Europe. Unemployment obviously elevated, and in particular inflation to be very low, and we haven't ruled out further monetary policy action from the ECB in Sweden, although we still fail to see strong and convincing arguments why inflation will rapidly move back towards target. We will see improving growth in Sweden, and we're predicting growth to be above 3% in 2015-16, and at that point in time, by mid 2015, the market should start to look forward to very cautious rate hikes in Sweden towards the end of next year.
Carl, thank you very much for joining us today. That's all for this edition of Forecasts. Click back on Friday as Monica Gibson will be bringing you another edition. Bye for now.